Good morning, everybody. Welcome to the Flow Show. Look at these fine gentlemen on your screen at the moment. Looks like a B-movie version of The Usual Suspects. There's that to get you started. Morning, Kay. How you doing, mate?
Hey, Ryan. Hello, everybody. Yeah, ready to, well, I hope we're ready to rock and roll. Yeah, it should be a hot Friday. And yeah, let's see what that good US job report has in store for us. Could be a mover, that one.
Yeah, very much so. Yeah, thanks, Patrick. I think that's a compliment. Was that way. Let's start off. Let's get off with the questions. Charles asking, what do you make of the decline in US rates in spite of big supply coming? I think the bigger news for the supply coming is obviously Powell's move or the Fed's move on QT, which has alleviated a lot of pressure on supply for Q3. That's the bigger picture story. So yeah, I don't think it's a big deal at the moment. Obviously, we've still got to see how all this supply goes through, but I think the market's gaze is off this one for a while because it hasn't shown any big problems. And as I say, Powell's done Yellen a big, massive favour with that QT move, so takes a bit of that pressure off anyway. And obviously, rates coming down is good. They don't want to be paying more than they need to, but we shall see. We don't know what's going to go on with rates just yet. Right, let's get stuck into it then. The market is still hunting around to see if the Bank of Japan intervened. Don't ask me why.
You're reading our chat.
Yeah, probably. But, so they've been checking the Bank of Japan accounts and looking at the current account estimates and results and seeing whether intervention came in there, and people have been drawing lines from that. Well, now apparently attention has turned to the Fed, and someone's doing some digging into the foreign reverse repo facility and central bank accounts that are held at the Fed, and probably doing another 2 + 2 = 5 and saying that it's likely they intervened. We all know it's likely they intervened. It's 99.9999999% certain they've intervened. So I'm not sure why the market is getting all up itself about trying to find out whether it has or not. Obviously, the amounts will be fairly important, even though it's old news, just to see what it cost them to do these levels of intervention. And then obviously we'll compare it to prior interventions like the one in 2022 period where they intervened 3 times. What was the total amount, Kay? There was a 5.6 trillion, a 2.3 trillion.
2022, you mean?
700 billion or something.
2022?
Yeah.
I think didn't we see like numbers around $60 billion or so, 66 in total?
Yeah.
That's the number that I have in mind, but whether it's that important, I don't know. I mean, every situation seems slightly different right now. But while you're on the intervention, there's just a headline hitting as we started the show, saying that the central bank FinMins, governors of China, Japan, and South Korea issued a joint statement saying that heightened FX volatility could affect Asian +3 prospects in the near term. That seems to be adding a little bit to what's happened here. We've also seen dollar China. We can elaborate on that in a bit, but it's a bit of a strange headline because China is in the mix there as well.
Yeah, they're all at the Asian Development Bank conference thing.
Yeah,
that's been going on. So this is probably where it's coming out of. There obviously was something I was going to mention as well, that apparently Suzuki and Ueda are holding a press conference on the sidelines later on. So maybe now we've heard that, it's going to be an embellishment of that rather than jump into conclusions that it might be about something to do with intervention. So that's coming apparently, that presser's coming apparently at 13:45 GMT, which is 14:45 BST. So that's roughly, I'll get my maths right. Where are we going? That's roughly an hour and 15 minutes after the NFP and 15 minutes before the ISM. But yeah, that statement just out.
Yeah, but
maybe that's what it's all about.
It may fuel a bit the conspiracy theory, yeah? That they are really wanting to do something about it. I guess that increases the risk again for something to happen after the NFPs. I was already going to mention it, but this headline is I find quite well. I mean, I know they have this meeting, but that China is in the mix. Normally, a lot of those countries, especially Korea and Japan, it's a bit surprising that they issue a joint statement with China as well.
Yeah, I mean, obviously we had the one with the US, Japan, and Korea at was it the IMF thing, and I don't think China was there at that one. So maybe they've just invited China along. But you know, FX and its effects are becoming a big thing now. You know, all the central banks are talking about it. These guys are now talking about it. So yeah, it's maybe that's our focus for the next year ahead. What happens with FX and whether there is going to be maybe some accords propping up if things get too unruly. But yeah, keep an eye on that one. But we know, well, pretty much all three of them, China, Japan, and South Korea, are intervening in their currencies. So yeah, it's not as if they're going to start doing something we don't already know about. But yeah, interesting indeed. Look at that, live news for you as it happens. Right, staying with the yen, the top yen forecaster. I don't know if this is a self-appropriated title, but this is RBC's Tan. Says he sees the yen sliding to the lowest since 1986 and may test 165 per dollar this year. Bit of an oh shit Sherlock comment saying traders have been selling yen on interest rate gap with the US. So despite all this intervention and dollar yen under the cosh, he still sees it going to 165, which is still possible. But let's see if the MOF have changed tack on how they're intervening. They're certainly keeping everyone guessing at the moment, and that's half the job done. Data coming out today, PMI finals and whatnot. A few bits and bobs coming out. Let's get that up. Services numbers coming up. We've obviously got the ISM as mentioned after the NFP. That's the services ISM. So over in Australia, went a little bit backwards, 53.6, still a positive, but no improvement there. Got a bit of unemployment data from Spain. The unemployment change down 52.8k. Unemployment rate in Italy doing a bit better, 7.2%. The old green shoots going on there. The Norges, they held rates at 4.5% as expected, but they did say the policy rate will likely be kept at today's level for some time ahead. A little bit of a higher for longer message coming out from those guys, Kay.
Yep. And it's where I have always a little bit of a difficulty to buy into what they are saying. It's when they have to do it based on the currency levels. Okay, we know in the yen as well, but Norway is usually relatively pragmatic, but they seem to find the Norwegian kroner being too weak right now. It did respond to it, but we also know that, and also typically, and just an apartheid in between, Scandinavian currencies react to what happens, of course, in their fundamentals, which for the Norwegian kroner, with oil and gas coming back down a bit, and with the Norges Bank continuously selling Norwegian kroner, is not great yet. But they also do. They are a bit of accelerated euros, especially the Swedish kroner, I would say, but the Norwegian kroner is also in that lot at times. So we see the Norwegian kroner strengthening a little bit, but that's already happening. That was already happening on the back of the weaker dollar. But yeah, I mean they want to push back now against their own expectations for rate cuts starting from September or so. They want to push back a little bit against it because they find their currency a bit too weak right now. The data itself do not support for them to wait. But again, we can only watch and see and react to what the market is doing right now, and it seems that the market, at least temporarily, is buying their smalls more hawkish tone there.
Yeah, thanks, mate. Right, last bit of data is the UK services PMI, the final number again, a pip improvement over the flash, confirming the rise from last month. So those green shoots still in play there. Eurozone unemployment rate unchanged at 6.5%. ECB's Lane says we will continue to follow a data-dependent approach and not pre-committing to a particular rate path. Seems like one of the doves decided to come out and counter Hawke Holtzman the other day, saying we shouldn't think too much about a July hike after a June one. ECB Stornow says we're more likely to cut rates 3 times in 2024. So the fight is on. Doves versus Hawks. Who will win? I can't wait. Going back to yesterday's data in the Americas, Challenger layoffs coming in lower than last month, just under 65k versus 90k previously, though that report did come with an ominous warning from the bods there, saying that this is the calm before the storm regarding layoffs. All sounds a bit spooky to me. Meanwhile, initial jobless claims still doing not a lot at all. Still looking pretty good, actually. We're seeing the jobless claims dropping week by week, smalls, not a huge amount, but the trend is definitely coming in lower, but we're still knocking around the 200k mark. Continued claims were expected to tick back up to 1.8 million, came in roughly unchanged due to the revision. 1.7's still there. So there's been nothing from the jobless claims numbers for months now that suggests that anything should really happen in the NFP. The only thing that's really been looking a bit wobbly is obviously jobs and some of the PMI data, the jobs components suggesting a bit of weakness there. But is that going to translate through to today? Who knows? We will see in a couple of hours' time. Another bit of news for the Fed: unit labour costs for Q1 following the employment cost index. The unit labour cost index has jumped to 4.7%, was expected to jump to 3.6%. So it beat that. So again, still some pressure on that metric there for the Fed. They're not seeing these costs coming down quite as quickly as they would hope. They have been saying that wages have been moderating, but it doesn't look like overall costs are at the moment. And again, that's going to keep the market from getting too dovish over the Fed. We also had factory orders coming out as well, with durable goods revisions later on. Nothing really from the durable goods. Factory orders looking okay, 1.6%. Take out the big ticket stuff, up 0.5%, so that was good as well. We had Macklem out as well yesterday, speaking again, saying he was asked when rates are coming down and repeated that the bank is looking for reassurance that the recent fall in underlying inflation will be sustained. Says the inflation rate will probably stay close to 2.9% for the next several months, in part due to rising gasoline prices. Says when the BSE starts cutting rates, it's likely to be a pretty gradual path. Says repeats that the bank could start cutting rates before inflation hits 2%. And as mentioned, another central bank jumping on the FX bandwagon. Says cutting rates and weakening the Canadian dollar is something you factor in and take into account with how much you need to lower interest rates. Speaking of rates, Credit Agricole has made a massively huge call over the ECB. They expect them to cut rates in June. I don't know how they're going to live that one down. HSBC now sees the Fed only cutting 25 pips versus 75 pips this year in their prior forecast. Over in the oil, bit of fun and games, a little bit of fun and games in oil yesterday. One of the wires released a survey saying that OPEC Plus is expected to extend its output cuts in the second half of the year. And then another wire dropped a sources piece saying they could extend voluntary oil cuts beyond Q2. And so one was a sources piece and one was a survey, or maybe they were both the same, who knows. But that's the expectation coming out for oil markets later in the year. Over in the UK election, the Tories got an absolute battering as expected. It never hurts as much when you see the punch coming. That'll be Sunak's line of defence anyway. But yeah, not very good for the Conservatives. Obviously, Labour hopping up and down in glee at that. Doesn't mean it's going to reflect exactly onto an election, but it'll be a shock if the Conservatives do well at this election. So a change of government is probably all widely expected. No real news for the pound as it is. Now we're still waiting for when we get the date for the general election. Okay, anything else tickling your fancy today?
Oh, no, I'm sorry. No, I think you covered most. We can just look ahead at what's to come, mate. I mean, there are bits and bobs, but not really anything immediately market moving, I would say.
Yeah, exactly. Right, well, let's have a look at the NFP before we get stuck into the prices. Go over the usual bells and whistles for this one. Non-farm payrolls expected at 238 according to this calendar. Range is probably around 230, 250, depending on what calendar you look at. So we know the ballpark for that. Usual rules apply. The headline number, obviously important. In the first instance, if there's a huge variation. If there's not, then we look at the unemployment rate. That's expected unchanged at 3.8%. When you look at the unemployment rate, don't forget to look at the participation rate, because that can move the unemployment rate as well. Wages, again, will be a big focus for me, this 4% level, which we've been sitting in for quite some time now. So if that's a bit hotter, that may override any mild weakness we see in the actual jobs numbers, purely because of the inflationary impact. So it's the old three-step headline: unemployment, wages, before you make any decision about whether the number is a strong one or a weak one. Following up from that, as mentioned, we do have the ISM numbers a bit later. We'll get the final S&P Global PMI, and then we get these ISM ones expected to rise to 52 from 51.4. But as you can see there, employment a negative. So obviously this data will be after the NFP. So just keep an eye on that component. If the NFP is a strong one, and this one is, we'll see a further pullback in the employment number here. That could take the wind out of any dollar rally or rally in yields. So we're trading between data points. Take each one on its own merits. No double bubble Canadian jobs this week, so I'm assuming that's next week, because they're never usually too far apart. Kay, you've not mentioned NFP at all this week, I don't think. what are you looking out for exactly in these numbers yourself?
I was just looking at what you were saying. You are right. Canada is next week. I just quickly checked it while you were on it. Well, okay. Obviously, I mean as everybody knows by now, you look at the headline number, you look at the earnings, you look at the unemployment rate. It is in some of the actual data, like the claims and everything. This is not very clear that we are going to have a potentially weak number. Other indicators that we saw in the past flashing a bit yellowy, orangey at times have not given much right up to date, because the BLS seems to continuously put out high prints for those job numbers. So I don't know, but what I do know is that I'll be watching a few currencies in case we get like a weak report. And I would say this time I'm going to look at, first of all, the headline number and the employment rate. That is going to be what I'm going to be looking at first, and before the wages in this report. And on that front, let's assume we get like finally what the market is expecting or waiting for, desperately waiting for, that bad report. Then I think stuff like yen and Swiss, perhaps the euro as well, maybe really fast movers, especially the yen, right? Because we know what the MOF has been doing, and the market is really on its toes for everything yen related right now. If we get a real bad report, and then if you look at stocks, I think we may have this algo blip up to S&P is trading at what, 50.80 right now, perhaps 5100, above 5100. But if it's really bad, I think that there's going to be rally sellers, because bad is bad. Well, a shit number is bad in the end. But if you get a mild miss, I think stuff like S&P could start to rally again. Yields mildly lower, a bad one, they are going to get hit there. But then we still have to take into account if that report defies the laws of gravity once more. And then I think as we have seen, those other central banks, and now this joint statement out of Asia, people start to be a bit worried about what may happen. And I think it's more forward-looking than what is happening right now, apart from South Korea and Japan and a few others, perhaps not the majors. But they are afraid of what's happening if the US continues to print strong data. So I think then we need to be really, really careful if it prints another really good one, because then people will, I guess, be forced to buy dollars. And again, we are going into yet another big data point where the market is in the mood of give me a bad number so I can sell dollars. Okay, so yes, it's going to move a lot, especially if it's really bad. But I'm keeping like both options open. I did buy a bit of euro dollar yesterday because I thought the market would try to price in a finally bad one or so, but I've already managed quite a bit of it. I do have some downside on dollar yen because I found it very interesting what they did on this on the right after the FOMC. So I am sort of positioned for this bad report to come out, but really mostly in a stuff like where the MOF already intervened. If in turn we get a really good one, I think stuff like Swiss, for instance, maybe one to keep an eye on as well, because a good one, relatively good for risk, yields picking up again. Don't forget, Swiss is also now a funding currency, and despite the blip in inflation, I think perhaps now that the positions may have lightened up a little bit, that is one that I'm going to keep a close eye on a good report, and perhaps a bit of that Canadian thing, the dollar versus Canadian on a good report, maybe one to play as well. And people, I think, will be forced to get out of their euro dollar again, but that they bought ahead of the report. I think on a real good report, we may be in for a test of the 106 again on the euro dollar. That's possible. So that's what I'm looking at in the NFP. But then, as you already mentioned, we got the ISM. So ISM can be the kicker for everything that happens on the US job reports, but it can show a completely opposite picture. And then we will probably be going into a real messy Friday afternoon, I guess. And then if that really shows something completely opposite to what the jobs report is showing, then I think it's time to put down the pencils and go on the weekend.
No, I 100% agree with that. But yeah, you know, people want to trade the NFP, and it's fine, but it's very hard to jump in right in the numbers. There's machines far quicker than you or I to jump in there than that. Ali's saying you'll sell dollars, but be careful where you're going to be selling those dollars at. If it's already moved 50, 60 pips, you've got to be careful. But look at the severity of the possible price action in terms of three coconuts. Okay, the headline number, the unemployment, and the wages. If only one of those coconuts gets knocked off the stand, that's not going to be a huge reaction. 2, there'll be a bit more. 3, then you're looking at a big move coming. So judge it. You've got to judge it on all three metrics. And it is going to be, I don't know what tips the market. A bad headline, bad unemployment, but if that's countered by wages going to 4.5%, it takes some of the steam out. So it's a difficult one to judge at the moment. You've got to take it all in its entirety. But like Kay says, we know the market is in the mood to sell dollars at the moment. But if it's a good number, if all three metrics are good, then the market's going to go, that bloody Powell is talking out his arse again, because he keeps telling us we're still heading for cuts, but the data keeps telling us we're not. And then again, an hour and a half later, we got the ISM, and that can all change. I'm not sure I'm going to be trading a lot this afternoon, if I'm honest with you. But we shall see. I'm here to. We're all here to trade. There's always something that might tickle my fancy, but just be a bit careful. If you had a good week, don't go gambling it all on one number today.
Oh, that's absolutely, that is so true. If you already made money this week, I mean, keep it sensible. Really. The thing is, if we really get a good report, imagine that we get like a set of 2 good data rolling out there this afternoon, the NFPs and the ISM. Then I think we are going to be in the scenario where what I call like forced dollar buying. There won't be any alternative. And that's the thing, and that is going to be a dangerous market, I think, as well this afternoon, because the market is relatively ready to sell dollars. So if they're forced to buy dollars, that's where you can have quite nasty moves as well. So it's really, and it's Friday. It's really going to be something where we need to pay attention this afternoon and don't do anything stupid. And if you, like Kelly was saying, very right, give me bad numbers, I will sell dollars. Also, it's easy to say, because if the number is really good or really, really, really bad, the market will hammer it. But most of the time, we get a few waves, right? You get the first wave, which is the algos, who are much faster than we can ever be. But those algos are relatively fast in just making money, taking money, and smash and grab. And usually we have like a little bit of a counter wave, and then the second wave starting. So I know you might be really, really tempted on a bad also report to sell dollars, but I still would wait for a bit of a wave, a few waves to come around. Okay, that's always and especially with those ISM afterwards, I would err a little bit on the cautious side, especially when the amounts are concerned. That's how I'm going to play it as well. Unless I get like real confirmation of any side, the amounts are going to be relatively small. And then of course we can't forget Japan. Get a good number, and dollar yen shoots back up to 155, 156. I don't know if they won't be tempted to give it a go again.
Yeah, and I'm just thinking the same thing. I wonder if we get to see a few people shorting it, hoping for a bit of intervention, and then we know the story from that. You go short, and then it just climbs another 200 pips very slowly, and you wonder why you did that. So I think I keep saying that they don't trade data points. that's not to say that they aren't watching what's going on and they've not changed tack and are now just intervening when they see fit, just to sow uncertainty in the market and get those speculators questioning, do they want to be holding stuff? It's a long weekend in Japan again. It's a bank holiday here in the UK on Monday. By the way, there won't be a flow show on Monday. But yeah, it's all going to be a bit jumpy. And Ali, you say yes, in the last 80% of NFPs, most of the move reverses. You don't want to be the one trading that stat when it falls into the 20% that don't, because that's the one that will cost you money, of course. Kate, there's a question from Peter.
Yeah, I'm trying to understand the question, Peter. Can you tell me how to get most popular articles that showed on your page? Most popular on what page, Peter? Can you please be
the Trading View one? Because there is a news filter, isn't there, on the Trading View thing? I can't remember where it is. I don't have it running. Where is it? There's
yeah, but I wonder what I wonder what exactly which page exactly where that Peter B is talking about. Right. I mean, just in general, the articles that we see are whether we have like a secondary view on when it comes out on Twitter or headlines here and there on those news pages that we see. But for instance, if you look at really Trader Summit, and I don't know. Yeah, but if you look at news, there's actually you can subscribe to the Reuters page for free. There is the Bloomberg page, but those are not like live headlines. They very usually do some how shall I say, sales where you can I'm subscribing for less than 10 quid a month, for instance, but those are not like the live headlines. Those are articles. Then there's another one which is called Market Screener, but there's loads of headlines on there as well. There's a good few of them around there, right? Where you can find headlines or interesting articles. If you look
I think Peter, you need to be specific. What articles you're talking about? You're talking about news. You're talking about analysis. You're talking about Kay's View or Trader Summit. Yeah, I think let us know exactly what you're talking about, mate.
Okay, the one just recently showed.
Well, that would have been your Trader Summit one, wouldn't it? And Gav's just put the link up to that.
Yeah, but that's not me. Is it?
You did a Trader Summit thing, didn't you? With
like weeks ago.
Yeah. Well, anyway, let Peter tell us what he's looking at.
Because Peter said Peter B says the one just recently showed. Oh, yeah, are you talking about just news and stuff? That's investing. It was the traders. It was the Trader Summit. Oh, okay.
Okay.
That's a long time ago. Anyway, yeah, I mean, the other one, the page that we use and that Ryan is showing for the data headlines, that's a free one. It's just investing. It's not the ideal calendar, but it's since it's free for us retail traders. I mean, and for you guys, it's always an interesting watch. There's another one that's a real gold mine when it comes to data, and that's I had it just up, and that's Trading Economics. If you go on there, that's a real gold mine when it comes to data, all sorts of data. If you want to look at that, I'm looking at that. I'm really using that a lot to refresh my memory on data. All countries are on there. It's very comprehensive. It's really great. And it's free as well. So that is, and the rest I'm not 100% sure on what Peter B meant, to be honest. Yeah, back to our what were we fishing about, Ryan?
Yeah. So this is trading economics for those that don't know it. It's a great thing for looking back over data. If you want to see
Genius.
historical stuff, everything that's going on, it has pretty much everything on there. So yeah, that's always a good one to keep an eye on. We need to get royalties from these guys. Keep pumping their stuff. Yeah, this one I just use for you guys. I don't look at it for my actual data, but it's good to show on here just to give an idea. Right, Charles is wetting his pants about $1. Are you in a position, mate? So if you are, let us know what you're doing. I'll have a look at it quickly because it is looking a bit softer. There's nothing really happening. This is all dollar, in my opinion. There hasn't even been that much of a move on that headline that we just had about FX, but it's definitely looking a bit weak at the moment, dollar China. But you know, we're in this zone area. They're keeping it pretty tight. They're not ready to let it go anywhere. We will know about it if they want this to move. If they think the one's too weak, too strong, they will be quite explicit about it. And when that happens, we will get a move one way or another. I'm still short. I'm going to look take a bit off because I've not done anything in this in months to my position. If we get a move back down to the bottom of my zone, I'll probably take a bit more off just to put more money in the bank, pay for the costs of holding it. But unless we have a proper break below this lower zone, yes, mate.
No, I was going to ask you. I mean, having been in for a while, must have been costing a little bit of funding, right? But it's not. Is it? It's not that massive, right?
No, it's not restrictive. It's not restrictive.
Exactly.
It's not like sitting in dollar yen for 6 months. But no, I'd only take a bit more profit, as I say, just to cover those costs.
Yeah, nice one.
Anyway, but yeah, I don't know whether I might get back to trying to job it around. You know, we had this 728 area that held a couple of times, so that's looking a bit of a level. Obviously, an old level going back before we had to run up to these highs. Yeah, I don't want this to become a pension trade, but I need a bit of movement in it just to keep the account ticking over. Yeah. But until we get a move one way or another, it's going sideways. So, but yeah, is it bottoming? I don't know. If we get down here,
I think we need to just wait. We need to just wait to see whether the Chinese want to put it back where PBOC is fixing it around 710, and then a whole new world may be opening, to use a cinema.
Yeah, exactly, because they keep fixing it down around here in CNY, and we're still sailing above. I mean, that shows it doesn't really show much at all where they keep fixing it compared to where the market is, but that's what they allow it to do. But yeah, let us know if you're trading it as well and what your view is on that, and whether you think it's bottoming as well, mate. Right, let's have a quick look back to dollar yen for this one. Yeah, I'm loath to trade. I've spent weeks telling you boys and girls, be careful trading dollar yen. It's a bit of a wild west at the moment, and I've tried jobbing it around. I tried playing it over that intervention. I was actually short 154s up to 155, got stopped out on that, and it's been south ever since. So I've been jobbing it around and not making money, losing money on it. So nothing huge. I'm not doing anything huge in yen at the moment, but still, that's just reminded me just to sit on my hands. Maybe it is going to be important though where we close the week. I think you know, we've got this big 152 area, 38.2 fib of this move. Can't be too reliant on the techs with what's going on with intervention and stuff, because again, the MOF aren't watching technical levels, so you've got to be a bit careful. But I think depending on the data, won't they step in again later on just to give it another knock and upset the specs? I think 152 is going to be our key component for the week. If we're below there for any reason, NFP or whatever, then you know, they're going to be winning their battle for the moment, and it's going to show us that this is probably going to be a rally sell more than a dip buy. as opposed to what it's been for most of the year and beyond. So yeah, if you want to trade it, be careful. You can try and keep it tight, but there's enough volatility in here that a simple bit of news headline is 40, 50 pips. So if you're going to do it, keep your trade size small, I would suggest. But yeah, we'll see where this one wants to finish up. Same with a lot of pairs, really. Euro dollar, still looking fairly okay, but this is all on the back of the dollar. So you've got to think if there might be something here, if the ECB are going to indicate another cut in July or a series of cuts, you've got to be wondering that this might be favour the downside. I think on balance, K, for today at least, I think I'm more a dip buyer in this one on a strong number than a rally seller, I think.
Yeah, you know what, Ryan? I've been because I mean, for us guys who use actually the tech to confirm or to find levels to support our fundamental view, I'm starting to have the view for a few days now that we've traded those interest rate differentials perhaps enough. You know, I mean, everybody knows that ECB is 90% certainty of them cutting in June, but you can only trade interest rate differentials for well, okay. I mean, if a situation is just stalemate and you've got like 1.5% difference between the one and the other currency, it's an easy carry trade. But 1.5% or 1.8 or 1.9%, the short end is 1.9% difference. So it's a big difference in favor of the dollar. But we cannot also forget that that kind of differential, you're not getting 2% every day. You know, this is spread out over a whole year, really. So you get like pips every day, and interest rate differentials only work for as much as they are worth. So that means in times of stalemate, in times of what we have seen, the dollar, the US outperformance versus all the rest, it's really nice, and you get paid to be short euro dollar. But if the situation has been traded for so long, don't forget that just a 3-5 pip move in a day against those differentials, and the differentials are erased. You know, so I think for the time being, we've traded those differentials enough, and we are just looking at what those US data are going to bring us. So if you get a bad number, don't forget about those differentials for a while. Of course, yields will come down, and of course the differential will be reduced as well. But it's going to just have an impact on the currency. People who trade carries or whatever, they are not going to trade it. They are going to trade the real data. And in that respect, I'm starting to think we've traded it enough right now. Even if we trade it into June, a 1 month euro dollar is actually not that much, you know. So it can be quickly erased, this differential when the numbers in the States turn around. So I would not be short euros now just on the back of those differentials right now, and I'm actually rather thinking the same as you. Dips may be bought unless you get like a really outstanding number, right? And the market is forced to buy dollars on a Friday.
Yeah, but then that 106 level would look juicy. You know, from here to 106 on a good NFP, 140 odd pips. That's a good stretch point in anyone's book. So yeah, that's maybe something to look at. Top side, you know, up towards 108s, that old zone, 108, 30, 70. Again, it's really looking for stretch points for me. Is the data a game changer? Is it going to last longer than 5 minutes before the next bit of data? Who knows? But there's going to be plenty of levels to trade anyway. Ali's saying, talking about Powell, the Fed, the election, Biden, Trump, that sort of thing. Powell was pretty explicit on Wednesday about the election impact or the political impact. And I think you've got to take him at his word that he doesn't give two monkeys. They're running policy for the economy, not for the election. I don't think it doesn't affect them in any way, shape, or form. If they need to cut, if they need to hike, they will do so. I think we know that from Powell. that he's there to do what's necessary for the economy, not for one president or the other. But even if he did, he's between a rock and a hard place. Cut rates, you're said to be helping the one of them. Don't, you're said to be helping the other one. So whichever way it goes. So I think we need to look at the politics around the election more for what it means for policy, fiscal policy, and the like, rather than Fed policy. Although we've heard that Trump may want to get rid of Powell and put in law that he can change rates himself. Oh, that's going to be fun and games. We know. Euro sterling, someone was also asking about. Well, you're going to guess my response for me. Doing nothing. 85.50 back in the box. 85.70, 85.20s. Nothing to be done here. Trade the edges. Leave the middle. That's the biggest thing for that one. Nothing there, as mentioned on the election thing from the UK. So all quiet and dandy. Kay, do you want to take it for a couple? I noticed the clock ticking.
Yeah, no, just a just a quickie, perhaps. Just want to show those differentials. You know, this is what the short-term market trades the most. Yeah, it's the 2-year differentials. And you can see, like, euro, it's been, so it's inverted, right? So you can see the deeper it goes, the more differential there is dollar versus euro, right? So and it's been ticking up a bit for some reason, of course, because the dollar yields are a bit lower now. But we have seen also that the European yields are moving really in tandem with what the dollar is doing. It's ticking a bit up right now. I'd say there is an interesting one here, which is like really a couple of BPs away. If we close the week tighter, I'm going to say, than 185 BPs, or and then, okay, 180 BPs is also going to be important. But keep an eye on where we close this differential for a hint on what euro may be doing into the end of the week, and then at the start of next week as well. And that's why I'm saying, like, okay, I mean, you can only trade it for some time and for the importance that it has right now. I'm just going to reiterate. Okay, so euro dollar, to me, if we had a bad number, it's 108, 107.95, 108.05, somewhere there. If we break through, then I think we are going for a little bit of a ride on weaker data. But watch for first reactions. If you hit it up here and then come back down, that's a possibility, right? So wait for the confirmation of this one to break. The downside really in between, somewhere 106.60 again, 106.50, again. But the big level, as Ryan already mentioned, is 106, right? Dollar yen, I think, is going to be an interesting one. We've got this little bit of a support line here, which is holding right now, just around 152.80. Prior low around 152.60. But really, this is my zone, right? Because not only was it prior highs having broken, and then we went for another ride up to 160 finally. But watch out if this 152 goes without interventions, of course, and then stays below. The confirmation of this move is if we would get a close somewhere below 151 and a quarter, 151.30 to close the week. Okay, I'm just going to reiterate. I think we were all a bit confused about what they did at the MOF after the FOMC, and I think it's good enough to continue to be confused and to be a bit worried, because they may use, you know, the Friday afternoon. They are on holiday, by the way, at this Asian. Yeah, well, I mean, it would be surprising if they intervene right when Kenda and Suzuki are doing a joint press conference. But you never know whether they left orders or so, because it's the Bank of Japan in the end who is going to execute it, to put dollar yen really below 150. And that the joint declaration that we see, statement that we saw like about 50 minutes ago, is even raising more eyebrows, I think. But anyway, if we get a real bad number, wait for confirmation below here, because we can go for a stop run and then start a rebound, okay? But 152 is still my major level, all right, on the dollar yen. And we know Bran. You need to know about the cable, right? Cable, we are here, Bran. 125, 50, 65, 50, 70, stretch it to 125.90. If we get a close above 125.90, I'd say we're in for a move back up into the high 126s, possibly 127s. All right, that is for me on the cable. We have seen extremely little impact because it was all very much telegraphed about those elections that we had yesterday here in the UK. If you get a really strong report, or a continuously strong report supported by the ISM, I think we can have a look back at what's happening in the mid 124s. And there again, as we've seen, bit of support here just below 50, bit of support ahead, bit of support ahead. So this is your level here. Call it 124, 50, 65, okay? This is going to be your zone on the downside. If you test it and you hold it, then we are probably going to continue to trade up and down in this range, all right? And the last one is dollar Swiss. And we've seen a bit of liquidation on the Swiss positions. As I was talking about it yesterday, there is a bit of liquidation going on the Swiss pairs. There could be more coming if we get a bad report. Watch for what's happening around 90 and a quarter to 90.40, okay, on the dollar Swiss. If that goes, we could see more liquidation than you of course 90 the figure here, those lows. If those go, we can see more liquidation into the weekend. And really don't rule much out today, especially if those MOF guys would have the good idea of trying to put dollar yen under 150, for instance. But don't exclude it. If we get a strong report, though, then I would in turn, okay, we are going to see a blip, but then look at what's happening around 91, 40, 50 again. But I would perhaps think that for the end of the week, we can do this. But I'd say that if we get a strong report supported by the ISM, then the book management, the global book management that we've seen after the Swiss CPI could come to an end, and we can start to gradually move up again. So those are the two different scenarios that I see on what's going to happen this afternoon. And with that, Ryan, all back over to you. Wishing everybody a splendid weekend.
Thank you very much, mate. And yeah, I echo those thoughts. Thank you for coming and watching us here at the Flow Show. Don't forget, if you've got any opinions of what we're doing here, anything you'd like us to talk about that we don't already, we're welcome to take or any feedback you have. Have a very safe rest of day trading. Be careful. Don't blow any good money you made this week. Won't see you on Monday. We'll see you on Tuesday. Have a great weekend, everybody. Thank you very much.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.